Oh, good morning, good morning. And today I'm coming to you live from the Breakers in Palm Beach as I'm emceeing an investor conference today. So I'm just up here getting ready and I need to get this morning market commentary out. So good morning. My name is Kenny Polcari and I am your host of the party. And today is Monday, November 7th, just one day ahead of the midterm elections, which are just heating up all over the place. But let's talk about what's going on in the market and what happened on Friday. So the NFP report suggested that the job market is stronger, reiterating what JJ told us, right? Some investors are suffering from FOMO, right? That fear of missing out. That's because they try to time the market. Oil is now trading at $92 a barrel, up 22% since Joey started to empty the Strategic Petroleum Reserve. And like I said, it's election week. 40 million early ballots have been cast. Is the wave coming? And what do we have for dinner? Well, it's a side dish. It's the Italian-style sweet sausage stuffing that we make for Thanksgiving. So the NFP report revealed that the job market is alive and well, right? We restored 216,000 jobs versus the estimated 200. Wages grew, just not at the pace of inflation, which just means that workers continue to get hit over the head by rising prices. Unemployment ticked up to 3.7% and likely going higher. Twitter and Meta, the latest to announce job cuts. But let's not forget, so many of their employees are located overseas, right? They're not U.S. employees. 60% of Meta employees are non-U.S. citizens. That's about 52,000 people. They employ people all over the world. So I suspect that employment in India and Eastern Europe is going to suffer as well, but we're not counting those numbers. And I wonder if they're canning U.S. employees over non-U.S. employees because U.S. employees are more expensive, right? Is that a reason why maybe the U.S. employees are going to get hit a double time? Well, we're going to find out because we don't really know where those layoffs are coming yet. Now, not sure if any of their metaverse imaginary employees are targeted for layoffs, but I know that the real world employees have something coming. Now, the Wall Street Journal did make a point of saying that just maybe we might see real estate prices in the Bay Area begin to retreat, even if for a bit so. But I would imagine that that's going to be positive, no? In any event, laid-off employees are going to get a generous RIF package and most likely get to keep their stock. So why are we getting hysterical just yet? Maybe many are going to find a new job relatively easy since the latest JOLTS report reveals that there are north of 10 million jobs available in the United States. So if somebody wants a job, they should be able to find one. So let's just see how this all shakes out, right? By the time it's over, we'll see who's left standing and who isn't. Economists are suggesting that we need to see U.S. unemployment reach 6% before this is going to be over. So get ready because right now we stand at 3.7. The layoff season has just begun. Remember, companies do their year-end house cleaning between now and the end of the year. Financial services is well known for their holiday layoffs. Happens every November and December. Trust me, I've lived it for 40 years. And recall that both Goldman Sachs and JP Morgan announced that layoffs are coming and others are soon to follow. We've also seen it across the tech space, right? The tech sector has announced all kinds of layoffs this year. So once they all start handing out those pink slips, watch what happens to the unemployment rate in December, January, and February. Or maybe not, right? Because we might get a short-term offset. From who else? The retailers. They're expected to hire seasonal help. Nordstrom's hoping to hire 20,000. Amazon's planning on hiring 15,000 and paying $3,000 bonuses and $19 an hour. Walmart is planning on hiring 40,000, which is down 75% from the 150 that had last year. That's because they want current employees to work longer hours. Target is planning on hiring 100,000 workers and paying them $15 an hour. Macy's is looking for 40,000 workers as well. And all these employees are offering shopping discounts for new employees, which is a big help considering that inflation is running at 40-year highs, right? So anything to help people go out and spend money. MasterCard is expecting seasonal holiday spending to be up by 7%, but notes that inflation is certainly going to play a role in how that's calculated, right? Spending up Spending is supposed to be up, but the number of gifts are going to be down. Consumers are going to look for ways to navigate the inflationary environment, searching for deals and sales everywhere they look, right? And I suspect that is going to happen. Now, what the NFP report reveals is that JJ told us the truth, and that the economy remains hot and therefore will remain at risk of further rate hikes. So you ask, why did the markets rally on Friday? Well, that's simple. They heard the news that they expected. There was nothing in this report that changed the narrative at all. And stocks had sold off hard prior to the report. So strap in. Some of it was like a relief rally. Some of it was like, okay, there's nothing new there. So, right, rates are going to continue to rise until we get to the newest terminal neutral rate, right, which is now somewhere between 5 and 5.5%, up from 4.6% that JJ had intimated a couple of weeks ago. At the end of the day, the Dow added 402 points, or 1.2%. The S&P up 51 points, 1.4%. The Nasdaq gained 132 points, 1.3%. The Russell jumped by 20 points, 1.1%. And the transports rallied by 273 points, or 2.1%. U.S. Treasury yields surged higher, and then they backed off a bit, right? The 2-year ended the day yielding 4.67, the 5-year 4.33, and the 10-year 4.15. Yes, it is still inverted, but no, we have not averted a recession, right? That's coming. Or is it here already? We just don't know. Now, rising rates are going to continue to be a headwind for stocks as we move through this period, right? Something that we've been talking about for months now. And remember, there are some economists out there who think the Fed must raise rates above the CPI rate in order to kill inflation. And speaking of CPI, get ready, because that's just one of the data points this week, and it's due out on Thursday. And the expectation is for us to see an increase of 0.6% on the top line month over month, up from last month's 0.4 of an increase. To 0.4%, right? But when you take out food and energy, it's supposed to only be up 0.5%, a slight decline from last month's 0.6. Year over year readings are expected to be up 7.9% on the top line and 6.5% ex food and energy. Now, both of those would be slightly lower than last month, which is convenient considering that energy has risen by 22% since October. But let's see how they frame it. They're going to tell us that the rents have come down along with housing prices. Now, housing prices, yes, but I'm not sure I'm seeing any relief in rent declines yet. New York City, Chicago, Miami, San Francisco are just a few of the hot cities that are not seeing any rent declines yet. But let's remain hopeful, because everything else is up, right? Food, utilities, energy are all up. Other eco data this week includes mortgage apps on Wednesday, and real average hourly earnings year over year and real average weekly earnings year over year are due out later in the week as well. But look, this week is not going to be dominated by economic news or earnings data at all. It's all about the election. The election is only one day away, right? The races are heating up. They're neck and neck nearly in all the states that are the key states that everyone's looking at, right? Arizona, Pennsylvania, New York, and Georgia. The New York Times runs with this headline over the weekend: Americans flock to vote early as hints emerge of Republican strength. Well, that's kind of interesting. The turnout, the story goes on to say that the turnout is high in most states, and experts see broad Republican energy as well as Democratic enthusiasm in major battlegrounds. Anxious and polarized Americans have swarmed early voting locations and returned mail-in ballots in droves, casting more than 32 million votes as of Thursday, as turnout in most states keeps pace with the levels of the 2018 midterm elections, and voters navigate heightened tensions over the democratic process, right? By now, it's actually over 40 million votes. But anyway, 32 million early votes, right? They've been cast as of this story, turnout keeping pace with record 2018 levels. So tell me again, how early voting doesn't work, right? In fact, I voted on Friday. I made my appointment online. I showed up at the polls. I had to show my ID to prove who I said I was, and that I had a heartbeat. And then I was given a ballot. I put it into the voting machine. I made my selections, and then I brought it over to the ballot counting machine, where I entered it into that machine myself, and I watched as my vote was counted. It was simple. The whole process took 20 minutes start to finish. And I will say, it was very secure, right? There was not an issue of, is it secure? Is somebody else touching it? Did somebody else take it away from me? I did it all myself. And I continue to ask this question. Why isn't there one voting system used by the entire country, right? I have to keep asking, why do we have different systems in different states and different localities? Why can't we have a consistent voting system in this country is beyond me, why we don't have it. Florida, in my mind, did it right. It was simple, it was technologically sophisticated, it was clean, and it was quick, period, the end, right? I did it, no hassles, not questioning anything. Now, let's go on to oil. Oil was surged up and through $90 a barrel on Thursday, did close the week even higher at $92.60. We're now up through all three trend lines, so 88-ish becomes support, while 100 now becomes resistance. U.S. futures this morning are up, right? Apple's under some pressure, down about 1% on the news that the iPhone 14 production has been temporarily reduced due to more COVID restrictions in China, suggesting to consumers that if you by chance want an iPhone 14 by Christmas or Hanukkah, then you better get your order in now. You see, that's how they create iPhone hysteria, by telling you can't get it, right? The same way retailers have been telling you to start shopping early, otherwise you're going to risk missing out. It's a joke, really, but it works every single time. One way or the other, I'm not really sure I believe the Apple story. I think it's more of a setup, but let's just see what happens. Maybe I'm wrong. At 6 o'clock this morning, Dow futures were up 165 points. The S&P's up 20. The Nasdaq ahead by 60. The Russell's up by 11. Like I said, there's no economic data reports today, and tomorrow is election day. So expect much of the conversation to revolve around the choice of what Americans are about to make, right? There are some that are suggesting that recent rate hikes are working, thus thinking that a Fed pivot is on the horizon, which I think is completely ridiculous, right? You also have others that are betting that a change in leadership, right, is going to be favorable for the markets, and I agree. I think that is true, especially since we've seen such value destruction across the market, but certainly in certain sectors, right? So I do think a change in leadership is going to create this year-end rally. In Europe, markets across the region are also up. At 6 o'clock this morning, the markets were up by about 0.5%, right? Nothing really going on there. I mean, earnings, yes, but no economic data points, and they're awaiting to see how our elections turn out. The S&P closed at 3770, up 51 points on Friday, and is looking to rally again today. 3805 is the first resistance point, followed by 3900. A change in leadership will most likely lead to a rally, right, short term or not. The depth of it is going to be dependent upon how much of a drubbing the Democrats take, right? Will they lose control of both chambers or just of the House? Will Joey then come to the middle now that he's expected to be a lame duck president? What will the progressive left have to say then? It's all very complicated, but remember, politics in the end don't price stocks, right? A strong economy is what prices stocks. So you know my advice. Sit tight as a long-term investor, right? Stick to your plan. I suspect we're going to see that year-end rally, especially if we see a flip in Congress. I would look beyond, though, the next 6 months and instead focus on the next 6 to 12 months. I'd look beyond the next 6 weeks and focus on the next 6 to 12 months. I'd look at mega cap multinationals that generate good cash flow, pay nice dividends, and can weather the storm. Remember, you want to buy the STPN, right? The stuff that people need: energy, healthcare, consumer staples, utilities, with some big mega tech. Not social tech. There is a difference, right? Stay away from Twitter and Facebook and concentrate on, the Apples, the Microsofts, the IBMs of the world. Okay, so what do we have for dinner tonight? Well, this isn't really dinner, but this is a side dish for Thanksgiving. It's my Italian-style sweet sausage stuffing that my grandmother used to make every year. Now we make it in my house. For this, you need garlic. You need sliced garlic that you're going to slice. You need onions that you're going to dice. You need Cuban peppers that you're going to chop. You need salt and pepper. You need sweet sausage meat out of the casing. You need celery, diced Italian bread that you're going to cut into cubes. You need chicken broth. You need mashed potatoes, olive oil, and white wine. Now, you're going to cut up the Italian bread into like cubes, right? Maybe make like a cup of it and then just set that aside. In a large saute pan, you're going to heat up the olive oil and saute the garlic. Then you're going to add the onions, the Cuban peppers, and the celery. And you're going to all saute that around until it becomes a little bit soft. Maybe it's 10 or 12 minutes, something like that. Now you're going to add in the sausage meat. You're going to brown it nicely. You're going to use the back of a fork to break it up as it cooks, right? So that it becomes chunky like. Season it with salt and pepper. Next, you're going to add in a cup of chicken broth and a splash of white wine. Now, the white wine is optional. If you don't want to add the white wine to the sausage mix, then just pour yourself a glass and enjoy it. let it all simmer and come together, 15, 20 minutes, whatever. Just put it on simmer, then remove it from the heat and let it cool down. Now, in a big bowl, you want to mix the 2 cups of mashed potatoes that you made homemade, along with the bread and the sausage mixture. Put it all together, mix it well. Now transfer this mixture to a big buttered baking dish and bake it in the oven uncovered for 20 minutes or so on 325, right? It is so delicious. And if you bake it uncovered, then it gets a little bit crispy on the top, which is the way you want it to be. Anyway, when you serve this on your Thanksgiving table as one of the centerpieces, because once you have this, you'll wonder where it has been all of your life. In any event, I got to get ready to get downstairs to MC this conference. So until tomorrow, take good care.